Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing what is earnest money in real estate. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com. Earnest money is a payment, essentially a deposit from a potential buyer to the seller in order to show good faith in their intent to purchase the property. Earnest money deposits are commonly referred to as good faith deposits. The escrow process is designed to protect both the buyer and the seller during the real estate transaction. If the buyer's offer is accepted, the good faith deposit is used towards their down payment and closing costs. If the property sale falls through, in certain circumstances, it is possible for the buyer to receive some, if not all, of their earnest money back. So what is the importance of earnest money? Well, an earnest money deposit safeguards the interests of both the buyer and the seller. It shows the seller that you are a serious buyer with a serious offer. It protects the buyer because the seller essentially takes their property off the market once the offer is accepted. It protects the seller since if the deal falls through, they will need to spend more time and money marketing and looking for another buyer. So what is the average earnest money deposit amount? Well, while the buyer and the seller are able to negotiate the exact earnest money deposit amount, it is typically ranges between 1% to 2% of the property's sale price. In certain hot housing markets, the earnest money deposit might be 5% to 10% of the property's sale price. Now, the higher the earnest money deposit, the more serious the buyer is to the seller. A low earnest money deposit might signal that a potential buyer is not all that serious. So how do you pay an earnest money deposit? The earnest money deposit is made after the offer is accepted, and earnest money deposits are typically paid by personal check, certified bank check, or a wire transfer into an escrow account. The escrow account would be held by an attorney, title company, or a real estate brokerage. Earnest money deposit will stay in escrow until closing or if the deal falls through. Is earnest money refundable? You make an offer on a home and the seller accepts it. The sale is only completed when all the contingencies have been met. In most situations, if the buyer acts in good faith and the deadlines have been met, the buyer will usually get their good faith deposit back. There are certain conditions where buyers are able to receive their deposit back. During the inspection, the property has considerably more deferred maintenance than previously thought. The buyer can negotiate with the seller to get the work done or receive a credit. They can also back out of the deal. If a property appraises for a lower value than the agreed upon purchase price, the buyer may negotiate a lower purchase price, move forward at the same price, and make up the difference with their lender or back out of the purchase. Buyers that are unable to obtain a mortgage, buyers that are unable to sell their current home, if these common contingencies were part of the contract, the buyer should be entitled to the full refund of their deposit. You can learn more about contingencies in episode SS129. That's SS129. How do you protect your earnest money deposit? Well, read and fully understand the terms of the written contract. Know the contingencies and ensure contingencies for financing, appraisal, and inspections are included in the contract. Use an escrow account. Utilize a legitimate third-party escrow, a law firm, real estate brokerage, or title company, and never give earnest money directly to the seller. Be careful when wiring funds to escrow. Now, follow the contract timeline. If the contract states that inspections must be completed by a certain date, ensure you meet that deadline, and that will help to ensure that if the deal falls through, you can get all or the majority of your earnest money back. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.